Hey guys, this is Bruce Marshall from Simpler Trading doing the nightly video update for Wednesday, May the 23rd. And I want to start on the S&P right here. Let me zoom in on a daily chart because this was a pretty pivotal day today. Had a really good day for anybody that was long. And we had a nice turnaround from the open this morning. So as you can see, yesterday, as a matter of fact, let me back this out to a 2-day chart. So yesterday we were plugging along, everything was pretty good, and then we kind of rolled over here. China trade talks breaking down or that type thing. There's always a reason out there. I never know what the real reason is, but we always have a reason provided by CNBC and all of the talking heads in the media. So anyway, the market sells off here overnight, even lower, and it looked at that point like things, not that things were going to unravel or anything, but it looks like we could go lower. And if you notice here, let me pull this up. Give me just a second on our chart here. Now this is the ES. We have a pretty good level of support here, obviously at 2,700, right? And we didn't really get anywhere close to that. And in fact, during the day today, we really, we came down to 2710, and that was a little painful after coming off 2735, yesterday. That was a little unsettling. It wasn't nerve-wracking compared to what we've been through over the last couple of months, right? So anyway, as we got going during the day, this, again, I'm telling you, kind of tick by tick as we're coming through the day this morning, this looked like, I was not going to get worried until we got down here to about 2,700. Matter of fact, I really did not think we'd get that low, and we didn't. We bounced off that, and then from then on, it was kind of, lower lows and higher highs kind of throughout the day. This was the Fed, when the Fed meeting happened. Notice that time. See right down here at the bottom. Notice that time at 1300. That's 1 o'clock. That's Fed announcement, the Fed minutes today, and then it was up and off to the races from there. So we ended up the day all the way back up here. Really nice turnaround day today, and everything is looking much better. So let me zoom this out here on a little bit larger time frame, and we can take a look at a couple of things that I have been pointing out for the last couple of weeks. I have been targeting this 2750 level, and that's more from there's quite a few different levels that are kind of coming up around that same time. 2750 is a big psychological level. The round numbers, in other words, 2700, 2750, 2800, are pretty good magnets. The 25 increments, for example, 2725 is a little bit less of a magnet, but 2750 was kind of what I was looking for, and we got close here. I think this is 2742, and this was 2739. We didn't get here, and we're having trouble getting through here, and I keep coming back to this and looking at it on a larger time frame and from a Fibonacci level. This is a chart from Carolyn. We can see what's happening here. And this is pretty straightforward. We come up and we hit some of this resistance, some of this overhead, and we kind of bounce off of it. And we kind of try again, kind of bounce off, kind of try again, bounce off. And what I had been saying and what I'm still expecting is that maybe it takes another time or two, but we're going to break through this. And when we do, we should go higher. Now there's other things in the background going on in addition to this, and that's kind of what I wanted to show you. So let me back this out even further, and as a matter of fact, let me go all the way out here, and you can see a couple of things. We're still in this kind of compression of the market in general, which is good for us at this point. We've slowed down from these super violent swings back and forth, and now we're kind of compressing, and this generally leads to a strong breakout one way or the other. And obviously the trend at this point is going higher, so I expect that at some point we break out here. Now we can't pop out the champagne yet and and celebrate because nothing's happened, right? We haven't cleared the first hurdle of the 2750. We have to clear that first before we get going. But again, things are looking much better. And let me pull up. Give me just a second. Let me pull up this chart here. So what else am I looking at and looking for? If I can find my chart, give me a second. Okay, here it is. So if we look at, I want to just look at some of the major kind of themes of the market. This is the regional bank ETF, the KRE, on a daily chart, on a 1-year chart daily. And this is the tops indicators looking very bullish. There's nothing at all bearish about that, at all. This looks like it wants to go higher, right? We look at the XLF again. Sorry, give me just a second. Hit the wrong button. XLF here again is turning up, looking positive, etc. Now the XLF does have some insurers and other things rather than just like pure banking, so it's lagging a little bit, but that's to be expected, right? So why am I mentioning the financial sector, the KRE, the XLF, and there's plenty of other ones out there. The S&P 500 is the weighting, the sector weighting of the S&P 500 is about 17% financials, right? That's number 2 weighting behind technology, which is about 20, I think it's about 22% now. So anyway, very important, right? And guess what's not been what's been lagging, not been working? Technology and financials. But if you look at the charts here, and again, I'm just looking at the tops indicators, these look to be turning up. I think the financials have a lot more room to go. We know the Fed has got the foot on the gas with rate hikes and lightly on the gas, I would say maybe. But anyway, this certainly gives us some tailwind to go on. So how does that compare to the other indexes? Well, we've seen the IWM has been on fire, just really doing extremely well straight up. But in the IWM, I mean the RUT and the IWM, same thing, right? But we see had a little stall out here. Yesterday was, I don't know that it was a top by any stretch, but might we see it consolidate a little bit back here? Yeah, we might. The Russell is being the small caps are kind of, even though it's a much broader based index, it is small cap. They don't pull the weight of the load in the market. The S&P and the NASDAQ pull the weight of the load, not the Russell. It's always great, when the Russell, they say that the RUT is the soldiers and the S&P and the NASDAQ are the generals, and the RUT takes the other ones up. And I suppose that's can be true. I mean, historically, I've looked over the years, and in a lot of cases that is the case. But I suspect that we might see some pausing here in the Russell and some sector rotation back into the NASDAQ. So let's look at the NASDAQ real quick and see what it looks like. Of course, we know that it's not been doing well, right? But if we look at where we are in the NASDAQ, we've got a lot of, there's a little bit, we're going to run into something here. This is a daily chart, but, nothing goes straight up. But, we could retrace and get going. So, again, let's consider, consider this. What is the makeup of the NASDAQ itself? And the number 1 holding in the NASDAQ is Apple. Look at this on a 1-year chart. Is that anything but bullish? No, it looks great. It looks great to me. And again, this is tops indicator I really like. Very bullish. That's the number 1 holding weighted of the NASDAQ. Guess what's number 2? Amazon. Is that a bearish chart? Nope. Looks great to me. Looks like it's going higher. Let's see. Microsoft, I believe, is number 3. Very bullish. And so on and on and on and on. I can go through these, and just keep going. Of course, we've got Google. Um, Google's had a little trouble here, but again, that's bullish chart. There's nothing looks terrible about that chart. So, the bottom line is, I think that we are not going to go straight up, but I think that our bigger picture, even in the short run, intermediate term, is higher. Will we go straight there? No. Of course we could pull back. Of course there could be any kind of situation, circumstances, that kind of stall us out. But I think ultimately we just keep, we keep going higher. And in fact, we might, if we can get, a real solid turn in the market and can get over some of these levels, we might in fact have a run higher here. And then of course we'll stall out maybe at 2800, 2850. I don't know. We won't know until we get there. But again, that's kind of what I'm expecting, and this has been building. If you guys have been listening to me for a while, you know this has been building up. I've been saying this probably since, I don't know, since here, because we suspected that this was going to be where the turn kept going. You got double bottom here, everything looked great. Let's keep on moving, and then this whole rebuilding, slow us down, stuck in the mud kind of process happened. And now I expect that this could be turning up to go to the upside. So again, just kind of position for that. So when looking at that, what names am I looking at? Of course I'm looking at Amazon to the upside, Apple to the upside, the KRE itself, some of the banking stocks, JP Morgan, Citigroup, etc. The other thing, the transports, obviously they are going to, if you look at that, that's an almost identical chart of the S&P. Transports, I think, rebound in the transports. You've got the airlines, you've got the rails, you've got the trucking, so forth, some of the marine stocks. But again, we're kind of we're at a good spot. I've been saying for the last couple of months that we're in no man's land and we're in limbo and all that kind of stuff. And I think we're coming out of all that. So get your pad and paper out and start making lists of things you want to own. Start watching for the next quarter of earnings that will be coming up late July, and we'll start making some money. I don't have any specific names for you right now. Well, I mentioned some names. Again, with some of the financials, I like JP Morgan. I like Bank of America and Morgan Stanley. There's a lot of them out there. But I'm really, liking the technologies. Palo Alto, Cisco Systems. I like CRM. They're going to report earnings next week, so I like what you can do there, unless you just want to buy the stock or whatever. But then again, I'm looking every day and trying to continue to make heads or tails out of this, and it looks like again we're starting to kind of come out of this, and hopefully we get some real direction here, turn this thing back up, and we can all start making more consistent money as we go in a direction. So I hope this is helpful to you. Join us in the rooms, of course, and we'll drill down on more specific ideas when we run across them and get better setups. But until then, good trading, and I will see you at the next update. Hey guys, I almost forgot. I meant to show you guys this link to John's class. That's going to be tomorrow night. It's Thursday night, tomorrow night, at 7 o'clock. I'm going to try to make it. I did not make the last one, but I think this is going to be a really good class. We all worry about and wonder about the entries and exit points, when to get in, how long to stay in, how to get the maximum profit out of a trade, etc. And John is going to dive deep, and it's going to be a really good class. The thing that kind of caught my eye here is the one size fits all does not work, and we've seen this happen really dramatically in the last couple of months with the market doing all kind of crazy stuff. So if you've got one system that's that always works, it won't always work, right? And that's just the way trading is. We have to adapt and change. So I think this class can really help you, and I hope you can make it. Again, this is a free class tomorrow night, 7 o'clock. And if you've taken a class from John, of course, you know it's very entertaining as well. So hope you can make it, and I will see you in there. Thanks.